You're watching the Millennial Report. I'm Brad.
I'm Meg.
We've seen a lot of headlines come through this past week on investing and millennials in investing. So we wanted to tackle this topic and give you kind of the basics.
Hairy basics,
like
okay?
the basement basics of what you need to know about investing from a millennial perspective. We do want to give you this disclaimer from our great Nasdaq Office of General Counsel.
Neither Nasdaq Inc. or any of its affiliates, collectively Nasdaq, makes any recommendation to buy or sell any security or any representation about the financial condition of any company. Investors should undertake their own due diligence and carefully evaluate companies before investing. 100%. Reasonable.
So now that we got that out the way, here's some headlines that we saw in the news. One from our good friends at CNBC.
Why the millennials aren't investing. So there were a few reasons they named. The first one was that we don't feel like we have enough money, or we don't view ourselves as having enough money to participate. Two, we may not know how. We don't know how, or we feel that we don't know how. Three, and this was a smaller subset, but it definitely showed up on their report, was student debt, being one of the reasons that we abstained from joining and participating. Four, a lack of relatable experts, which is interesting. I can definitely see how that one came out. And then we are very conscious about expenses and transparency. This reminded me of that horrible commercial that I always see where the son goes out to lunch with his dad and they get there and the dad's like, "You're doing real well. You should start investing. You should start talking to our guy." And the son's like, "Psh," in the very, very caricature millennial ways, like, "Psh, I don't need a guy. I do it on my phone. Do you realize how much you spend on the guy? Do you know what those expenses are? What is he really doing for you?" And of course, while I don't appreciate the attitude of the the caricature that they display, it is, it does reflect some of the priorities that we have, making decisions as investors. And I think that, the market is answering that, and it's coming up with a couple of solutions.
It is. It certainly is. And so one of those solutions that I found within an article from Yahoo Finance that I believe has been mentioned several times before in the news and headlines, 3 reasons millennials should consider a robo-advisor. Now, for those of you, first, the 3 reasons that they gave. Number 1, robo-advisor is low investment minimums, so much lower than the traditional amount of wealth that you would need to get managed or be considered by a wealth management firm.
Ticks off problem number 1.
Done. Smaller fees. You're always concerned in looking at the fees, what you're going to get charged on a per trade basis.
Yeah.
So there's smaller fees with a robo-advisor. And the third one is automatic rebalancing. So, and this kind of speaks into their algorithms that they have baked into some of these robo-advisors. It provides a sense of security for the portfolio that you're managing within them as well. This algorithmic solution almost be your fiduciary staple within this whole service.
Gotcha.
For those who don't know what a robo-advisor is, aside from what it does, what it is, it's a firm that interacts with clients mostly online. So you're not going up to somebody and saying, "Oh, hey, Meg."
You don't have a guy.
I don't have a guy.
Yeah.
I've got an algorithm. It's usually only online portfolio management, so you're not stepping foot into an office. Service is provided on the basis of computer models that we mentioned, and they're low minimums traditionally. That's a little bit of the education on what a robo-advisor is. If you didn't know, now you know. It's great bar talk, so why not give it a shot?
Do you use one? Do you use a robo-advisor?
I don't use one. I kind of do my own due diligence, honestly, and I look into them myself.
I've been on my end, I've been looking at narrowing down, there's a lot of choices out there right now. There are a lot of acquisitions being done as well. A lot of these bigger banks are buying up.
Right.
I don't even think I can call them startups at this point, but independent robo-advisors are being bought up by these larger firms. And now they have kind of that engine behind them.
Absolutely.
As well as, the kind of the branding of some of these long-time, very successful, trusted names.
Right, and why not leverage that brand to reach out to an audience base that's going to exponentially reach other targets that you're not already hitting.
Yeah.
So, so that's one aspect. I mean, as millennials, what would you say is probably the number 1 or number 2 reason why you would be scared to invest?
I guess one of my fears, obviously, is not having maybe the time to actively manage my portfolio.
Sure.
And it's also one of those things I don't like. walking away from your money, letting it sit, and kind of, you know, that's what, you know, there are some, you know, ETFs that, you know, benchmark with the market and things like that you can have some confidence in. I know that's, you know, typically my go-to, just because I, like I said, I don't feel like I have a lot of time.
it's time. That's the fear among a lot of young investors, millennial investors, is that, you know, we don't have the time to sit there and look at our portfolio every single day and monitor what's up, what's down. Nobody expects you to be Jim Cramer right off the bat. Nobody expects you to jump in and be a day trader and know exactly what movements the market is going to make and be able to foresee some of those anomalies that happen within the market on a daily basis. So, you know, that's one thing that kind of demystifies that, and hopefully breaks down a little bit of the barrier to entry for millennials that have that same fear that you and I have about the time.
Another fear that I have is, how am I going to be taxed when I pull out of an investment or, and you know, with capital gains? And I've so far been able to keep my taxes very, very simple.
That's good.
Which is kind of timely right now because, you know, I'm relying pretty hard on my TurboTax skills to get me through. That's one of the things too, is, you know, complicating my taxes is something that I know it only happens once a year and it's a Band-Aid you gotta rip off.
It's a scary time of year though.
Exactly, handling that. Pride as well, you know, I don't want to sit there and lose a bunch of money and feel like I was duped, you know, and you and I both, you know, we entered adulthood at the end of the recession. And so we saw a lot of people that are very smart people make investments with their money and kind of bank on that. A lot of our college funds were involved in that as well, and people got burned.
It just evaporated.
Yeah, and I don't want to be burned. I don't want to be burned by my own money that, you know, I've worked hard to grow and to save.
Right. And so in a report, I believe it was a report that was put out by Merrill Lynch, and one of the things that they noticed, millennials like to know and have a handle on exactly what their money is doing.
There's always going to be that veil between what you know and what you don't know when you take a risk.
Greater the risk, greater the reward.
I know.
I'll take you back to a quote that my grandfather always gives me.
It's going to be wise.
It's always wise, but it's very simple. It's a penny saved is a penny earned. Right? So
I think he got that from somebody.
I think he
did.
did.
I'm not going to try and knock that, but like I feel like I've heard someone else say that.
My grandfather's a great man, don't get me wrong, but there's a lot of things that he said that one day I read them in a book and I'm just like, oh,
he gave his endorsement. That's
he gave his endorsement, and that's all that matters to me because it's from somebody that I trust, which is what a lot of millennials are thinking about when they're taking stock and investing advice. It's got to be from somebody they trust. And when it's a salesperson that's giving you a call at 7 p.m. saying, hey, I'd really like to manage this little bit of money that you got, even though I know you have some student loans to pay off and you probably haven't eaten this week.
Yeah, no, yeah, exactly. I mean, they don't even call anymore. That's, you know, that's what in all those 80s Wall Street movies, they're always calling the suckers that they, they, you know, the big whales and things like that. And, you know, that's also fear-inducing in a way because, you know, those are always the victims in the movie. And I know they don't call now, but, you know, how else are you getting your investment news? You know, you follow, obviously.
You know, I've got Google Alerts set up for a lot of things. So a lot of the companies that I'm watching right now, some that I may be invested in already, I've got headline alerts. So I want to see, you know, what innovations they're coming out with, what's going to drive their valuation higher, and really make them look good among investors in the overall market, number one. Number two, one of the apps that I use is If This Then That, or the If app as it's called now.
You told me about that,
yeah. So what I did, one of the stocks that I was looking at very closely, I put into an If This Then That formula, and I said, give me a notification when this stock hits this price.
How to use this.
And so that's one recipe that I set up in If This Then That. And there's a lot of other apps like that out there where you can set up notifications. A lot of the brokerage firm trading apps anyway that you can utilize those to set up those types of notifications.
Yeah, I don't have any of those right now. I got to do that.
Yeah, I mean, we can set that up.
I got my Google Alerts, but yeah, no, I definitely have not enlisted the help of an app specifically for that.
Another source that you can utilize online, one of the things that I did way back in the day, story time, sorry. We had a competition within our class that we were monitoring. It was within CNBC. They were holding $1 million portfolio competition. And essentially, we were tracking who was having the highest return over a certain period of time. It was fun back then. So what I did was I would utilize marketwatch.com.
When we played, we had a couple of students that ended up just straight day trading. And
That's what it was.
And yeah, exactly. And they beat everyone else in the class, like for the first, like these 2 weeks. And eventually the professor actually, he realized this wasn't, this is definitely an inaccurate depiction of how it would be, but he outlawed day trading on the group because like this isn't part of the lesson we're trying to learn.
You would be getting killed on the fees.
Yeah, absolutely. I know, but that's exactly. But they were just, and these guys, I mean, the two of them, they would sit in the back of the class and they were animals. It was awesome, actually. It was pretty cool to watch for the 2 weeks. And then they got hit pretty hard when they couldn't trade as frequently as they had been. Some of their positions hit them really hard.
They're fun simulation environments. It's good for you to be able to brush up on your skills and your strategy and your basic investment knowledge utilizing one of those simulators and programs. I'm not sure if it still runs. We can reach out to CNBC and see if they still do it.
Yeah.
Even if they don't still do it. It's 2016. We gotta have like the 10-year anniversary of the $1 million portfolio competition. There are so many resources, both on television and online, that you can leverage to really kind of do your research and make sure that you're getting kind of the best strategy that's out there for you and your money.